Welcome into a brand new episode of WSI TV. Enjoy the show.
To this week's edition of Jim's Market Update. Now, of course, Jim isn't here, as you can see. I'm filling in for him. My name is Jordan Bishop, Chief Analyst, and I'm here with Lea Warren. How's it going today, Lea?
It's going well. We've got some interesting news for you today. But
yeah, absolutely. This is a very important market update because, as you would have seen on Friday, we actually put out our signal that you should go to cash, right? Now, what we're saying there is we'll still be giving you picks that we think are specifically designed for this sort of market. But anything else you're in, we would say close out, sit on that cash, because as the market goes down, cash stays the value that it is, right? So it's just like profiting in a bear market, really. Not to say we're going to enter a full-on bear, but it is a bit rocky right now.
Yeah.
So before we jump into the details of all this, I want to remind you to go onto WSITV.com. You'll get instant access to the WSI Vault. You'll also receive our free daily newsletters if you haven't signed up already. So Lea, I'm going to throw this over to you just to describe first and foremost what is actually going on in the market right now.
So the S&P has reached a new low in a record amount of time, which is not what we want to see, but we're going to run with it, and we're still going to find those picks for you guys. But this drop has been caused by a combination of factors, from shops closing and manufacturing and trade being on hold. And then now we have the travel restrictions going on. All of this is in response to the coronavirus. And again, we're stressing the virus itself isn't the real issue. It's the reaction to it and all the safeguards in place that are shutting down normal economic functioning.
Right. It's almost like we've sort of created this, artificially, this drop in the market. Because, I mean, at the end of the day, it's sad that people who are being affected, but it really shouldn't have hit the economy as hard as it has.
No.
We don't fully know how hard it has hit the economy because we haven't seen earnings reports. But people have stopped spending money. They've stopped going out. There's a lot of high-profile people now that are getting the virus. I do think once we hopefully see healthy recoveries from those people, we could see the snap back fairly quickly.
And that's what we're hoping for, because right now people are kind of ignoring the numbers. Over half the people that have been infected have actually made it through and are better now from the virus. So.
Yeah.
You have good chances of getting, it's just like a bad flu.
Exactly,
And once we see those high profile cases recover, it's going to be hopefully smooth sailing.
Absolutely. And you know what? It provides us with a great opportunity to buy back in. Like great companies like Microsoft and Amazon and the companies of the future are going to be able to be bought at lower prices.
Absolutely. So just thinking about what's to come, remember not to panic, remember to be safe, wash your hands, all that good stuff. And remember that cash is a position, as Jordan said, and things will continue to decline until we have normal functioning starting up again, because right now travel's taking a hit, retail's taking a hit, on and on. But once everything starts running like normal, we should be good to go. However, there will always be strong investments. Right.
I mean, one great thing that I love trading during times like this are commodities. We look at the oil industry. It goes up and it goes down, and you can trade it with inverse ETFs, which basically means if you bought an inverse ETF and oil went down, your investment would go up. So there's opportunities all over the place. That's really what we're going to be shifting our attention to, as well. And again, it's not complicated. Commodity trading can be complicated, as well as currency trading. We're going to make it really simple. And in our premium recommendation services, we're going to send you the stock picks, and you won't know any difference, right? It'll just be buy this between this price and this price.
Yeah, so make it very simple. Yeah,
exactly. So there's going to be a lot of opportunities still, and we could see a sharp snapback in this market.
Yeah.
So we'll obviously be keeping an eye on that.
Yeah, so in the meantime, just to keep an eye on what is going wrong right now, the heavily affected sectors that you should probably stay away from if you're looking to increase your portfolio: travel, retail, manufacturing, entertainment, and foreign trade are some of the most heavily affected areas. All of these are declining fast because of all the restrictions in place.
Right, yeah. Now, there are specialties within these within these sectors that we would look at. I mean, entertainment, don't think like Netflix, because we just did an episode on where home streaming, which we're considering a little different here.
Yeah, absolutely.
This is more live entertainment. You've got certain companies that do the events and stuff like that. So, again, there are these sectors are heavily affected, but there are little plays we can work on between them. And here you have the strong sectors for us, Lea. Why don't you talk us through those a little
So just like there are some sectors that are kind of feeling the pain with all of this that's going on, there are sectors that are actually getting stronger because of it. Some of those, real estate is just strong despite whatever is happening. We're just at that place in the real estate market right now. It's been going strong for about a decade. Healthcare is a good place to look into for obvious reasons. Same with pharmaceuticals. And then long-term bonds are always a safe bet, but especially right now, it's a good place to turn to when we're worried about the direction the market's going in.
Yeah, absolutely. And as I mentioned, Amazon and Microsoft earlier, the discount buying opportunities there, it's going to be incredible. You know, you're going to be able to get in the spot that people got in 3-4 years ago. So it's almost like you're able to hit rewind, go back, get in, and then follow the price back up, because these companies will return to their prices that they were at their highs, and they will go past those prices. I mean, these are staple companies in the technology sector. So, I mean, wait for our signal, of course. Don't just jump in now, because we'll sort of, you know, we can't time the exact bottom, but we'll see a bit of a turnaround, and we'll know when we should be getting back in these. So again, keep an eye out for the best investment. You know, we're always looking for that. We'll be here to walk you through that as well.
Yeah, so we're in a kind of a tough spot. We're still watching the market. We're not quite sure what it's going to do because we've never seen it react like this to an event like this. We've never had an event like this to deal with.
Right.
So it's all new territory. But amidst that, we always know that there's going to be strong stocks, and we're going to be here to find them for you. So.
Right. I mean, the thing is, people are people, and we're always going to react the same to most, you know, call it catastrophic events. So while there is no formal precedence for this, we will be able to use our expertise here and guide you.
Yeah, absolutely.
Back to it. So thank you so much for joining us this week. Thank you so much for joining me, Lea.
Yeah, of course.
We'll talk to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.